bring your own funds. And so CCNR was actually spun out of an existing mutual fund that was in the commodities and natural resources space. And it has a balance between futures exposure and equities exposure. And so what the team at Core Commodity did was it spun out the equity exposure in the natural resource category and took those assets and put them into this ETF, CCNR. And what CCNR does is it gives you exposure to natural resource equities. Well, what does that mean? It means a mix of commodity-oriented companies in the energy space, in the base metals and mineral space, in the agriculture space, and in the precious metals and mineral space. And if you look at the makeup of the S&P 500, you talked about the Mag 7 at the intro, we talked about the hyperscalers. That index is so dominated by technology, communication services, financial services, as well as consumer discretionary and healthcare. The commodities-oriented segments of that market, energy and materials being two of the most commonly watched, add up to less than 10% of the S&P 500 by weight. So a lot of people, investors, allocators, advisors who are indexed to the S&P 500 are naturally underweight materials and energy companies and a lot of these natural resources companies. And when you look at some of the secular trends at play in the global commodities markets, specifically the energy transition or decarbonization, if you look at the sort of deglobalization efforts from a supply chain or otherwise perspective, a lot of the raw materials that these companies in the natural resources segment are extracting to provide the necessary inputs to build electric vehicles, to improve the energy grid, to ensure that the manufacturing base that we're trying to bring back domestically is built, the data centers, all of the things that we laid out over the course of this conversation. And as we move toward a different form of energy markets, a different form of commodity markets, have these natural resources companies really at the heart of this trend. And so what you get is a globally diversified, actively managed portfolio of natural resource-oriented companies, which investors typically have very little exposure to, but also allow you to participate in some of these mega trends that are going to play out not just over the next 5, 10, 15, or 20 years, but over the course of the next 25 to 50 years.